Hello and welcome to another episode of the Federal Church Presents Better Than Bloomberg, covering the 2023 global financial markets collapse, of global financial system collapse. Markets will collapse soon enough. There was a interesting note here from Peter Schiff, Schiff Gold stuff. Again, I don't exactly agree with everything Peter Schiff has to say, especially because he actually is one of these money changers. I mean, he has this Euro Pacific Capital Bank and whatever funds actually is a money changer. But it's worth seeing because maybe they need to hear it from the horse's mouth over there as to why they're seeing nothing but poverty. So Peter Schiff appeared on the Capitol Report on NBC News, that is, to talk about the bank bailouts and the possible ramifications. He said that no matter what President Joe Biden and others tell you, Americans are going to pay for it. Again, they're going to pay in the form of inflation, even if they manage to keep their deposits. Their deposits will be worth nothing because the dollar in which it is denominated. The interview started with a clip of Treasury Secretary Janet Yellen assuring Congress that the banking system is safe. So should we feel confident in our banking system? Peter said, not at all. In fact, that comment is as accurate as her earlier comments that inflation is transitory, or the comments in the days leading up to the 2008 financial crisis when she and everybody else at the Fed was saying not to worry about subprime because it was contained. Again, it's worth watching.
And joining us next is Peter Schiff, the chief economist at Euro Pacific Asset Management. He'll break down the factors behind the collapse of Silicon Valley Bank and some of the implications. Peter Schiff, thank you so much for joining us.
My pleasure.
Peter, Treasury Secretary Janet Yellen today testifying on the Hill, essentially saying in light of turbulence in the banking sector that the banking system's fine. I want to play you a soundbite here.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them.
Like all the other times.
Peter, should we feel confident in our banking system
Especially
right now?
about crises.
Not at all. In fact, that comment is as accurate as her earlier comments that inflation was transitory, or the comments back in the days of leading up to the 2008 financial crisis when her and everybody else at the Fed was saying that not to worry about subprime because it was contained. Thanks to Janet Yellen, particularly what she did as Fed chair. She kept interest rates at zero for practically her entire term as Fed chairman. That's the reason that we had such a big bubble, those low interest rates and quantitative easing, and she was part of that. That's why all these banks are loaded up with now underwater long-term treasuries and mortgage-backed securities. So the banking system is a house of cards. It couldn't be less sound, and partially Janet Yellen is to blame for the current state of affairs.
Peter, we're really grateful for your analysis because you often give us a lot more background and context. When it comes to the nearly 0.5% decrease in the CPI, what does that actually tell you about the state of the economy?
Well, as I said, the economy is literally a house of cards. I mean, it's imploding. But inflation is going to get much worse because the Fed has already returned to quantitative easing. Whether they admit it or not, the way they are bailing out all the banks is by printing new money and adding it into the economy and taking on mortgages and government debt onto their already bloated balance sheet. So the Fed's balance sheet is going to go up, the money supply is going to go up, and that means consumer prices are going to go way up. And in fact, when President Biden is trying to tell everybody that they're not going to have to pay the cost of the bank bailout, he's lying. They're going to pay the cost through higher prices. And when he says that everybody's bank account is now safe, it's not. It's in more danger than ever before because your bank account is going to be eroded in value due to inflation. So even if your bank doesn't fail and you don't lose your money is going to lose its value.
Peter, I want to get your assessment of the collapse of Silicon Valley Bank and basically how it factors into the overall economy, what concerns you have, and ultimately, do you see any relation or correlation to cryptocurrency in any of this?
Well, first of all, the reason that the bank failed was because of the artificially low interest rate and QE environment that the bank operated in for a decade. It was the Federal Reserve that created all these distortions by its artificial suppression of interest rates, and it caused financial institutions to take incredible risk in order to get a return. And also, the U.S. government, through banking regulations, actually encouraged these banks, through favorable accounting, to load up on treasuries and mortgages because they didn't take a haircut on those assets like they would for other assets, nor were they required to mark them to market. So as they were losing value, they pretended they had no losses. And so this whole thing was a byproduct of bad monetary and fiscal policy. Cryptocurrency actually got started in response to the 2008 financial crisis and the fear that all the money printing would lead to inflation, which of course it has, and it's only getting started. But I think the people who turn to Bitcoin or cryptos as an alternative to fiat currencies or as a store of value or inflation hedge, they were mistaken. They got suckered into a subsidized gold. And I think there's a lot of money that's going to be lost in that space, and a lot of companies that are operating in crypto and blockchain are going to lose a lot of money. Unfortunately for Silicon Valley Bank, they were banking a lot of those companies, and so that was also another problem that they encountered. And other banks that have made loans to crypto-related companies and other tech companies for that matter, these loans are going to go bad because these companies have no profits. In fact, they have huge losses.
Peter Schiff, as always, appreciate your insights.
Oh, my pleasure.
Puts it pretty well, too. Peter noted that Yellen kept interest rates at zero virtually, her entire term as the Fed Reserve Chair. And of course she's going to be trying to say, oh, things are awesome, everything is fine. Yes, she was instrumental in causing the situation to begin with. And that's the reason that we had such a big bubble, those low interest rates in CE, and she was a part of it. That's why all these banks are really treasuries and mortgage-backed securities. And this is funny, too. I don't know if you can pick that up. But the barista who works in minimum wage thinks it knows more than people who call these crises before. And then think that, the pseudoscience of laughing like an idiot somehow makes any sense. Again, this is the sort of logic that got people into this mess to begin with. But so she was part of it, and that's why all these banks are loaded up with now underwater run treasuries and garbage. Mortgage-backed securities, also garbage. So that the banking system is a house of cards. It's not a house of cards. It's already installed. It couldn't be less sound, and partially Janet Yellen is to blame for the current state of affairs. The host noted the fall in CPI and asked what that said about the state of the U.S. economy. There is no fall in CPI. This is a fudged number, which is worse than Soviet data. Back when the Soviets, had their, centrally planned economy, and of course they fudged the statistics for it because it was a complete failure. Not unlike the state of the U.S. economy, which is also a complete failure. The economy is literally a house of cards. It's imploding, but inflation is not a house of cards. It's already imploding. But inflation is going to get much worse. It already is pretty bad. It's going to get much worse because the Fed has already returned to quantitative easing, whether they admit it or not. The way and again, the funny part about that is like the asset classes that inflated. Things like real estate. So why their shit class fucking filth now live in slums. Literal 10 slums or Bidenvilles, as they call it, because of exactly that. And now it's going to get much, much worse for them. And then the way they are bailing out all the banks is by printing new money, and adding it into the economy, and taking on mortgages and government debt onto their already balance sheet. So the Fed's balance sheet is going to go up. The money supply is going to go up. These consumer prices are going to go up. Yeah, and they'll all get pulled. Meanwhile, President Joe Biden keeps insisting that Americans aren't going to have to pay the cost of the bailouts. He's lying. They're going to pay the cost through higher prices. Yeah, and it'll affect the shit classes the most. The 0.01% that'll benefit from it are not these shit class morons. They will be the absolute poorest, abject third world crap on earth. Literally within only a few years, poorer than Mexico. And when he says that, every because your bank account is going to be eroded in value with inflation. Yep. Even if you manage to keep your deposits, whatever's deposited in there in dollar currency is going to be worthless because the dollar currency. So even if your bank doesn't fail, you don't lose your money is going to lose its value. So why exactly did SVB fail? Peter said it was due to low interest rate environment and operating in their deficit. Not to mention the dipshits who did the dipshit trade. It was the Federal Reserve that created all these distortions by its artificial suppression of the interest rate, and it caused financial institutions to take incredible risks in order to get a return. And to get any sort of yield, they had to lever up, or even better, take higher risk while being looked at. So that's exactly the environment that Youngster and Bernanke and to an extent Powell. U.S. government regulations also encourage these banks to load up on treasuries and mortgages to favorable accounting. It's not just that, it's done by convention. And the misperception, incredible misperception, that it is risk-free to the client, or that it is considered a cash equivalent, which they just learned is not the case. So this whole thing was a byproduct of bad monetary fiscal policy. And dipshits. That was a good one too, to get it from the money changer. Actual money changer too, as the Euro Pacific, as to why they're going to be poor. And again, it's also because you didn't donate. Make sure you donate. Bitcoin Mafia.